if you look at perhaps Eyes Wide Shut, because of the timing, because of the demographics. So there are a number that we have identified. But what I don't want to do is go into it. This is simply about resourcing. I'm not looking at risk because I say high, medium, and low. What I'm looking at is what is my resourcing priority. So if it's a high one, then you're getting a lot of resource. If it's a low one, it's going to be substantially less.
Well, the reason why I ask that question, right, is because sometimes something is considered highly classified, and you may have a number of officers there, and something could still happen. The law would not be perfect, but things could still happen. So there's no assurance that something that is not considered highly classified, that something cannot happen. That's why I asked that question.
So for me, it's a case of you try and manage the risk, and you're right. You know, if we're in one place, could something happen somewhere else? Yes, it can, but we will have resources on that will be able to respond to that.
And the reason why I asked that question, right, is because 20 years ago, I'm going to take you very far back. Okay. In 2005, at Miss Anguilla, shots were fired. Mm-hmm. Just before the evening news segment started, shots were fired. The Queen show had to be postponed until a few days after. So I'm saying that things could happen at an event that you think is not highly classified.
So I use an expression that I've used. I've been in policing a long time, and in policing and planning police operations. When I'm looking at something, I try and prepare for all eventualities and hope that we get the best outcome. If I can refer to last year's carnival, there were concerns because of some things that were being circulated in social media. But I'm back to that we planned for that, we resourced it in a way that was proportionate and commensurate, and actually the festival, certainly the feedback I got was that when people were at events, they felt safe because of the police presence that was there, because of how they were interacting with the public. Have we taken some learning away from last year? Yes, we have. We've talked about drone technology, which we will be using more extensively this year. But I have no reason to suspect that this year's carnival will not be anything other than a wonderful success. I mean, I'm back to the planning that the committee's done, the way we've worked together, and I have no reason to suspect that it won't be a roaring success.
See, you have to also take into consideration, right, Commish? Last year, the country is a bit different to this year. The country is very much unease right now, based on what have transpired in terms of crime for the past few months. So it's kind of difficult to compare this year with last year. In giving someone the assurance that they're going to be safe, I mean, it sounds nice. You understand? You're from Great Britain.
I'm from Northern Ireland.
From Northern Ireland, okay. You're from the United Kingdom. Yeah. But many years ago, I think you all know the story where a person broke into the Queen's bedroom at Buckingham Palace. With all the guards around the palace, someone got into the Queen's bedroom. So saying that it's going to be policed and everything is going to be safe is nice sounding words, but how could you assure us definitively that we should feel safe?
Because of the resources which are going to be deployed, because of where they're going to be deployed, how they're going to be deployed, because of the additional CCTV that we are going to put in place, because of the number of people who speak to us in communities that help us with planning, that help us with recognizing what a good event looks like. So I'm back to and I take your point. You know, you can plan as best you can, but sometimes something out with your gift can happen. However, we try and plan for every eventuality. And I'm back to I have additional resource that I didn't have last year. They will be deployed wisely. We've also body-worn video this year that we're trialing that we didn't have last year, which I think is helpful for us when it comes to policing some of those events. But I'm back to there's a lot of planning has went into this. There's a lot of risk mitigation has went into this carnival. And, you know, knowing what I know, that's the current document, not insubstantial in relation to the planning. But the point is, we will do everything that we can to make sure that this festival is as successful as it can be.
Okay, my final question is, how many persons have been arrested for the recent murders that have transpired on the island?
How many persons?
Have been arrested?
Off the top of my head, I wouldn't be able to give you an exact number. But what I can say is that I'm confident that for every murder, we have arrested individuals.
They are currently still in custody, or they have been discharged?
They have been arrested. Some are still in custody, but others were arrested, interviewed, while inquiries remain ongoing.
So some remain at large?
Some individuals who we spoke to are, yes, in the community. That is correct.
Okay, thank you.
But I'm back to you're innocent until you're proven guilty.
Pleasant afternoon. Just a few more questions for the Commissioner. Firstly, how does forensics work in Anguilla? So there, how to say it, at least the question, or at least the understanding I'm trying to understand is how is forensics done in Anguilla? Is it sent off to one of the neighboring countries, or do we have persons here to say if a gun is found, forensics can be done quickly and we get result, or whatever the case
So
may
it
be?
depends on what type of forensics you're looking. Some is done locally, others go off island for more detailed examination.
Okay. There's been a rise of motor vehicle thefts on the island. From your point of view, is it time for Anguilla to start investing in anti-car theft devices? Or is this just a matter of making sure that your vehicle is locked? Because at least from my understanding, one vehicle still is left to be found from the two.
So I always would say, from a crime prevention point of view, if your vehicle has anti-theft devices on it, like alarms, whether it's deadlocks or cutout switches, that you use them, because it makes it much more difficult for someone to take a vehicle. In respect of anti-theft devices, you know, that's up to each individual who owns a vehicle. But what I say to people who either own property or own vehicles, please secure it as best you can, because that makes it much more difficult for someone who actually may want to steal your vehicle or enter your property. So I always recommend that you lock it so you don't lose it.
Okay, based on, how to say it, what I hear, the individual arrested in relation to the incident that occurred in Rock Farm recently, is this young individual in relation to, say, the theft of electronic devices a while back? The question, or at least the question what I'm asking is what's it? There have been talk that he may be linked to, say, other previous crimes that have taken place on the island. So I'm just asking from you know.
So all I would say is it's not for me to publicly comment, because I wouldn't like to say anything that might prejudice any prosecution which is going to ensue from any report that we have. So it's not appropriate for me to comment at this time.
Okay, thank you.
All right, so I think that's it from our end. If there are any further questions or queries or concerns, the Anguilla Summer Festival page is operational. We also have our website that is operational. We look forward to a safe and successful carnival, and good luck to all of the participants, and thank the sponsors and participants, chaperones and parents for all of their support on this journey. Thank you.
Thank you very much, Minister and members of the Carnival Committee. Thank you, Commissioner Police, for being here this afternoon and answering the questions. And we all look forward to a festival reimagined. Thank you. And so we will have a quick break and we'll come back with the next part of our press conference. Thank you. Good afternoon again to all. As many of you may be aware, the government of Anguilla has embarked on a GST reform. That reform is to be implemented by the 1st of August 2025, and I will hand it over to Minister Honorable Kyle Hodge to take us through and set the groundwork. Thank you.
Thank you, Premier. Good afternoon to the media. Good afternoon to the people of Anguilla. It's good to be here at this press conference. This afternoon's update is specific to the Goods and Services Tax Act and the proposed amendments that we have coming to the House next week. Tomorrow, so just not to be confused, tomorrow there will be the second and third reading for the entertainment side of the Goods and Services Tax, while the more major amendments, the first reading will be next week. So we would have started some consultations from last week, Wednesday. We did the retail sectors, supermarkets, hardwares, anything that any business that retails basically is considered a retail in the retail sector. We also met with the restaurants. We met with car rentals and all those other sectors. So the consultations thus far has been progressing pretty well. Just this morning, we would have met with brokers, and even right now, as we speak, there's a consultation done at the Ministry of Infrastructure with the short-term rental sector. So this presentation, we're here for the Comptroller, Mr. Lanny Hobson, to walk us through. On my left is Mr. Grenville John. He is the consultant from the customs aspect of the amendments, and he will also walk us through with some of the implications and the impact that will start to come into place on August 1st. So the Comptroller of Inland Revenue, he will walk us through what the implications look as it relates to the retail side and the point of sale. So, Mr. Comptroller, Mr. Hobson, I turn it over to you to take us through the presentation.
All right, thank you, Minister Hodge. Pleasant good afternoon to everyone. Just a disclaimer before I proceed with my presentation. Just make it that the following presentation outlines the Government of Anguilla's proposal to restructure the goods and services tax. These proposals are pending passage of the relevant legislation, so please know that some information contained herein, it may therefore be subject to change. So the goods and services tax restructuring, dubbed the relief plan. The plan is to remove GST from goods, also to remove GST from specified sectors, namely restaurants, public entertainment organized by specified organizations and persons, including an educational institution, charitable organization, and persons who provide public entertainment on an ad hoc or seasonal basis. The wholesale and retail sector, and the manufacturing sectors. The relief plan will remove GST on imports and replace with a levy similar to the repealed interim goods tax, and that levy will be applied at the standard rate of 9%. It will be calculated on cost, insurance, and freight, the CIF, look at the values of imports, and it will not be compounded. Goods currently zero rated and exempt from the goods and services tax, they will continue to be treated as such. The government of Anguilla's objective here is to reduce inflation, provide food security for the citizens and residents of Anguilla, to increase consumer purchasing power, and to stimulate economic growth. The revised GST. The GST will be applied exclusively to services, including accommodation, tourism services, professional services, electricity, communication, construction, and other taxable services. The registration threshold is EC $300,000 at a standard rate of 13% will apply. Zero rating and exemption. Supplies currently zero rated and exempt under the GST regime will be treated as such under the proposed general services tax. These include exports of goods and services, long-term accommodation, financial and insurance services, specified medical and education services, rental and land for agricultural purposes, gaming, international travel, postal services, daycare services, and vacant land. The proposed implementation. First, the proposed general services tax. This will be administered by the Inland Revenue Department, while the proposed goods tax is to be administered by Customs. 1st August 2025 is the proposed implementation date. Understanding the application of the goods and services tax, the GST inclusive pricing. The GST Act 2021 stipulates that prices quoted and displayed are inclusive of the tax. This includes price tickets on goods or on the shelves in the case of a retailer such as a supermarket, a gift shop, a liquor store, and or a hardware supplier. The input tax credit mechanism. A GST registrant can reclaim GST paid, which is the input tax, on purchases and expenses utilized in the furtherance of the business. Since input tax is reclaimable, GST registrants should not include GST paid in calculating their selling price. Input tax credits are allowable on goods and services bought or imported for resale and/or business use, including office supplies and machinery, as well as other expenses such as security services, electricity, communication, and accounting and legal services. It's good to note that GST is not a tax on the business. Registered businesses can reclaim the input tax. The impact of the proposed general services tax on the wholesale and retail sector. So effective 1st August, goods will not be subject to the general services tax. Goods include food items, construction materials, alcohol or liquor, clothing, footwear, appliances, furniture, and motor vehicles, just to name a few. So how will restructuring the GST impact pricing? Taxable goods on hand, on shelves or in warehouses, other than a bonded warehouse for custom purposes, have benefited from the input tax credit mechanism. These goods should not include any element of GST in the selling price effective August 1st, 2025. Selling prices for zero-rated and exempt supplies, example, food items, they should remain the same, zero-rated. So how will restructuring of the GST impact pricing? I'm going to give an example. This is the first. So come on the 31st of July, 2025, the price of a taxable item, in this example, I'm going to use a piece of clothing. It is EC $113. This price is inclusive of the 13% GST. When you get your receipt, this is broken down at the point of sale system or your cash register. And on the tax invoice or sale receipt, it shows as follows. It lists the price of the clothing item, which is the $100. There's also a line that shows the GST and the percentage, in this case, the 13%. So then the total is what you will have to pay. So when it adds the clothing item along with the 13%, it comes up to $113. And this is what is paid by the consumer. The GST component on inclusive pricing. Now, to determine the GST included in the selling price, you could simply multiply the selling price by the GST fraction by using R divided by 100 plus R, where R is the GST rate. R, when it's worked out, it will show as 13 divided by 113. So using the previous slide, which was example number 1, we see that the selling price of 113, we take the selling price, times it by 13 divided by 113. And what that will do is give you exactly how much of the tax is coming out of that price. So this is something you can do as you walk around a store. You could simply take the price, use that calculation, the 13 divided by 113, and then that will tell you exactly how much GST you should be paying on that item. So the GST included in the selling price is, in this example, $13. So this is the amount by which the selling price should reduce on 1st of August, 2025. So here's an example of what you see on your receipts and what you should see on your receipt come August 1st. So presently, in this space in July, again, like I said, the receipt shows the price of your item, using the same example, $100, the GST, percentage 13, which work out to be $13 in this case, with your total showing at $113. Now remember, I said that the GST will be removed in place time for August 1st. So using the same item, price at the $100, with that 13% removed, instead of paying the $113, you're only now paying the $100. Because again, the GST is being removed, so that tax is no longer there to be charged. So no GST can be charged or collected by any business or person in Anguilla on the sale of goods come August 1st forward. So on July 31st, the price of a taxable item, as I stated in the example, this will be reduced, so naturally you will see that price change. And that's why I also gave you the example before, in case you need to do the working out yourself from your receipt, so that way you could tell whether you have been charged or not going forward. So how will restructuring of GST impact the pricing? For those who can see the slide, hopefully on the live broadcast, if you take a look at here, this is just kind of an example of how things may look within a store's inventory. They're going to have a list of items. In most cases, the point of sale system will have it priced with the inclusive of the tax. So I'll just take the first item here, which is a Load Runner Jumbo. We see that its GST inclusive price for that item is $129.95. So when we do the working out of the GST, it would take out $14.95 out of that item. So right now, you will pay $129.95 for that item. But come August 1st, when the prices are reduced and changed by removing the 13%, in this example here, the $14.95, that item will now sell for $115. So, again, looking at the column that says GST inclusive pricing, that is what the prices are at this moment. And then the middle column, which states GST, that's how much the actual tax is. So because we're removing that tax on August 1st, then the prices will reduce by the tax amount coming off. So the impact on pricing, you have a 9% goods tax. Now, keep in mind, once the stock on which input tax credit has been reclaimed and it is depleted, and the business have purchased or, in this case, imported goods under the new goods tax regime, which is now 9%, it is expected that businesses will revise their pricing mechanism to include the goods tax, which will not be reclaimable going forward. So once again, I'll repeat that. One stock on which input tax credit, so remember my example, I said input tax credit, that's, once it's removed, it has been reclaimed, so they will be able to claim that back. You make a purchase within July, you have one last filing, which will take place on August the 20th, and then you're able to reclaim that back. So the fact that you're getting it back, is no need to try to get it back by selling it onward to the consumer to pay it back in. So that business will already make that money back. So in the case, that's why removing the 13% is no effect on them because they already made that money back. So it is expected that businesses will revise their pricing, however, once the new goods and services tax come into play. So that means after they have depleted the items that they currently have on their floor, in their warehouses, on their shelves, after making that change of reducing the 13%, and once all of it is sold out, and then they reorder, and then in August, now you're going to the 9%. Of course, they will do some changing up of the prices to include that. Because again, now the 9% is not reclaimable like the 13% was. So what will change for the sectors going forward? Again, effective 1st of August, persons operating in wholesale or retail sectors will not be required to register for the general services tax. As such, they cannot charge, they cannot collect, nor can they remit the tax. They also will not be entitled to the input tax credit. Effective 1st of August, when the proposed goods tax is implemented, persons or businesses will pay 9% at customs on importation of goods, inclusive price domestically on supplies such as goods for resale, stationaries, office supplies, and freezers. So the proposed goods tax will not be recoverable or reclaimable and will therefore be a cost to the business. So it is likely businesses will factor the proposed goods tax in their selling price. Persons will also pay the proposed general services tax on services such as electricity, communications, legal, accounting, and security. I just chose these specific because they are relatable to most businesses, right? So they still would have electricity. So on the electricity bill, the GST component is still there. However, the stores, businesses will no longer be able to reclaim that back. Same thing for the communications. And as stated, if they have any security from a firm that is registered for GST, they will still invoice and charge the GST, and the business will, at that stage, not be able to claim that back either. So the proposed general services tax will not be recoverable or reclaimable by non-registrants, and will therefore be a cost to the business in those different sectors that is being removed from. So it is likely businesses will factor the proposed general services tax in their selling price, right? Because naturally they receive that cost. So cancellation of registration. Persons operating in sectors must apply for cancellation of GST registration, and this is done at the Inland Revenue Department. So upon cancellation of registration, these businesses are required to return the registration certificate to the Inland Revenue Department. Going forward, they cannot charge or collect GST or the general services tax. Persons must remain registered if they are providing other taxable services and if they meet the registration threshold, which I mentioned is still 300,000 EC dollars. So transitional arrangements that must take place, price display and reconfiguration of your point of sale systems. So on the 1st of August 2025, prices for goods should not include the GST in any form of it, general services tax, or the goods and services tax. So there's no tax on going forward. Now the Inland Revenue Department is mindful of the short transition period and propose the following. A business can display notices that GST included in prices will be removed at the cashier or point of sale system. Now this all depends on the store type as well as the type of point of sale system that they have. They will choose the method in which to notify their customers on what changes are taking place within their establishment. They must reconfigure their point of sale system to suppress or remove the application of the 13% GST. That simply means that no tax invoice or sales receipt for goods should reflect GST on or after 1st August. So just to preempt, there may be instances while the businesses are, like I stated, it is a short notice, so they have to get their system tax in place to make those changes. So there may be instances where you will probably see the word GST tax in the same place where it shows now on your receipt, but make sure that it is showing at a 0, right? So it shouldn't have no number there with 13% or anything on that of that sort. It will be a 0. However, they will work towards getting that completely removed, so it should not appear on the receipts anymore going forward. So again, no need to be alarmed. That's why I gave you the way how to work it out, just to be sure that, you know, everything is above board and that. And again, you should not see the tax appearing anymore further. And at some point, it will be totally removed where the words GST will no longer show on the receipts or the invoices. So again, bear with the business community as they work towards transitioning to have this all done. Now, persons are encouraged to contact the Inland Revenue Department to discuss transition timelines for their respective business or businesses, so that way we will work with the business community with this transition. Continuing transition arrangements. If a hire purchase agreement is entered into and GST has not been fully accounted for, the remaining tax due on the agreement must be accounted for on the last return. That is, for the tax period July, which we're in now. That tax period is actually filed on the next month, which is August 20th. That would be the last time that I will file. So the last return for the tax period July 2025 must be filed on or before the 20th of August 2025. The amount outstanding to the Inland Revenue Department in a business that has an amount due, this is still payable. So by the tax being removed, does it remove that obligation? So again, persons are encouraged to settle any outstanding matters with the Inland Revenue Department at your earliest convenience. So we encourage you to please come in and visit us so we could find a method that works for both parties. Lastly here on transitional arrangements, excess credit. Excess credit, or in this case what would be a refund due, it will be paid at the earliest subject to an audit. So these payments will not be automatic, and persons will need to apply for their refunds. So simply that means the multi-tax system, which taxpayers utilize to do their filings, there will be an option in there once you have an excess credit or you do a refund, there will be the button showing that you are entitled to a refund that must be pressed by the business. Once that is done, it will be notified to the Inland Revenue Department. We will then review the account. There will be some instances before we make that payment where we may have to go through an audit on that business just to verify that the filings were done correctly. And lastly, persons will be required to retain books and records for a period of 7 years after July 2025. And during that period as well, they may also be subject to audits. And that concludes my presentation. And Minister.
Thank you so much, Mr. Hobson. Before we go to questions, just to also add that businesses would have received a letter over the weekend. I think it was on Saturday. IRD would have sent out a letter requesting the current pricing of products in the store. And that is because consumer protection, they have an exercise that they're doing. They want to be able to monitor what the current prices look like. And then, once August 1st comes by, we'll be able to evaluate and monitor the slight reductions that will take place. So it's just a letter requesting what people already know, what's already on your shelf, and what is already priced in your POS. Just if you can just send that simple request, send that simple pricing forward to us, that will help us as we go forward with this reform. So I can open it up now for questions.
Did you want to take Mr. John first, or
So, questions?
I have a basic question in terms of revenues, government revenues, that is. It would seem as if GST would be taken off all goods. Is that correct?
Yes. Goods, all goods.
All goods.
So the acronyms GST would now stand for general services tax instead of goods and service tax. So all goods will be free from being charged GST.
Now, before this happened, GST was imposed upon goods and services, right? Now it will be exempted from goods. What effect, per se, would that have on the economy?
Well, the intention here is to, allow more people to have spending power, to increase the spending power of people. You would have seen in some of the examples that were presented where immediately there'll be a 13% reduction. In fact, what we've heard from many consumers is that they are waiting on August 1st, because on August 1st, prices on goods will be decreased on items. We also would have heard from several merchants who are anticipating, a jump, an uptick in sales, because people are holding out at this time, waiting on this slight reduction for them to go ahead and shop as much as possible.
Just one more question. And in terms of the, again, it was said that government will lose 21%?
Yeah.
Or the cost of the cuts, tax cuts, will be 21%
Yeah.
in revenues.
Right.
Is that 21% actual, or is it an estimate?
Well, I think it's estimated. It's still left to be seen, because
mean-
the thing about dropping a price, lowering a tax, that can result in increased spending. So it is estimated. It can only be estimated until it's actualized.
Yes, good afternoon again.
Yeah.
It would appear to me, based on the presentation, that on August 1st there will be a 13% decrease, but soon thereafter you could have at least 9% increase again. Am I to understand it correctly?
So let me clarify. The 9% is going back at the port. That 9% walks into your pricing mechanism. It's not a 9% that is added on top of your profit. 13% was charged on your profit. 9% goes into your pricing mechanism before your profit. This is how it was done before 2020, when GST was implemented. So it was always a tax that was embedded in your pricing mechanism, and then you would always add your utilities, you would add your labor, and then you will add your profit on top. GST would have caused the 13% to be charged on what went into your pricing, and then the 13% went on top of your profit. In Anguilla, being a small island with a low population, we are faced with already inflated prices. We are faced with already inflated shipping. So to put 13% on top of your high markup, because you have to most likely have a high markup because of our circumstances and our geographical location and how we have to get goods here. So the 9% goes into your price before profit, if that answers your question.
Yeah, so
And no compounding, very important point.
can you give us an idea then of what prices would look like after the 9% is imposed?
Well, if we could go back to that slide, Mr. Hobson, there was a slide, example 2, yeah. So this is a scenario.
No, but see, that is after the 13% is
Right.
August
Oh,
1st.
you're talking about the 9%.
After their stock is run out and they import, what
Right.
will the prices look like then?
So we don't have that slide right now? Yeah. So Mr. John, when he comes on, this is something that we'll be able to also look at. But if you look at that slide, and it's up on Facebook as well. So the prices after August 1st would have seen a slight decrease. You can anticipate a slight increase on top of the 115 at the top, but it could still be lower than 129 when GST is added to your profit. So that is something that
Is there
once.
a possibility that it could also be higher?
Well, different business models, will determine that. We have spoken to various businesses on island, and they all have different models. So, it's left to be seen, if products go up slightly or remain slightly lower. But as a government, we will continue to monitor. And if there are other amendments going forward that needs to be made, or if there are other policies that needs to be moved forward in order to assist certain sectors, that will be done.
I'm just going back to the question I asked a while ago about the actual estimate. Logically, it is an estimate,
Yes.
right? But we realize that 21% is very close to quarter of the full scope of the revenues.
We are talking about just the goods and services tax revenue. We're not talking about the entirety of government's revenue, because there are a lot of other areas, a lot of other revenue
agree.
heads
I
where
agree.
government get revenue
But I
from.
mean the revenues that were collected from GST,
Yeah.
there would be this quarter of these revenues.
Yeah. And we have accepted that
Yeah.
we will collect less, because over the years we have collected too much. We have collected more than predicted, more than expected. So we have made a decision to collect a little less for the greater good of the people of Anguilla.
I agree. I am not against GST relief. Be that in mind. I'm not against the relief, but I am just concerned, like some people are, about the impact
To government?
right. I mean, the impact that this would have on our revenues. For instance, the services that government provide costs.
Yeah.
And the fact that you will have now quarter of GST being removed, which was beneficial for services, that kind of concerns me in particular.
Yeah. So I can tell you
yeah.
that, and I could tell the people of Anguilla, that the services that government right now provide for the country, whether it's Senior Shield, whether it's healthcare, whether it's education, those services aren't impacted. And as it relates to capital projects moving forward, those aren't impacted either. So, we're looking out for the greater good of the people of Anguilla.
So one more comment. You're saying that the services which government are now providing will continue, and if there's an impact, if there's an economic shock, they will still continue.
Definitely. Yeah.
Okay. Thank you.
Most welcome.
Yes, good afternoon once again. Just a few other questions. I do have other broader questions, but rather wait until the end of the presentation or the conference. To the gentleman that made the presentation, my questions surround compliance. I think when the last government implemented the GST, what we heard, or at least what I heard, was some merchants charging GST on one cash register and not charging GST on the others. So now, this time around, there are concerns that others may leave the GST on the price to say score more of a profit. So my question is, compliance this time around, what is the government's plan to ensure compliance across the board, and are there any consequences for non-compliance?
Yeah, no, thank you for your question. So I start from the back and work my way back, come forward, right? So yes, there are consequences for non-compliance. In our legislation, there are fines and penalties for such. The Inland Revenue Department, along with the Consumer Affairs Unit, will be doing a little bit more presence for a bit, at least starting off for sure. We'll have a lot of presence over there. Learning from what happened when we first rolled out the tax, we knew that there were instances of persons doing things that were not in keeping with what it is that's trying to be done here. In the case of making sure that they reduce their prices or change their prices come August the 1st. So we will be monitoring that drastically and immediately. And also you, the consumer. That's why we try to educate you on what to look out for because we expect you too as well, who may be in the stores a little bit more and at different stores, just to make us aware as well too. So that way we could go out and, inspect and see exactly what is happening and try to correct it as fast as possible.
Okay, so you did say that there are consequences. Do we have to wait until the House of Assembly to hear the consequences, at least the amount that they would be subject to be paid? And the other back-end question would be, is there a way for us locals that when we shop, we can take pictures and we can say, report the shop or the entity that is in violation?
Yeah, most definitely. We have our email address, which is gst@gov.ai. So any instances of things such as that, yes, you could definitely share that with us if you want to be confidential on that. And that line is only monitored by specific managers who have access to that. So there's no need to worry about any information getting out in reference to that. So yes, definitely feel free to share any information via that medium or any other officer in the Inland Revenue Department. That is also fine.
And the amount that for the fines if non-compliance is found?
Right. So those will, you will probably have to wait and listen to the because there are some amendments coming forward. So there will be some changes in that. But just to be sure that once it's passed, but they will be mentioned in reference to those fines.
Okay, thank you.
Okay, we have a next presentation. You have more questions on this particular aspect of it? Okay, there's a next presentation. If you give us 2 minutes just to get the computer remotely onto the screen.
tax with a rate of 13%. Now, also in the legal framework is the exemption mechanism. Goods that are exempt and zero rated, these are also covered by legislation. And then there are goods that have been granted some exemption by the government, whether it be to a particular sector like the hotel sector or to a particular group or charitable organizations. Now, in terms of the way the tax is administered, the various taxes that I went through are administered. You have the tax base for import duty and custom service charge. Those are based on the CIF value of the imported good. And the CIF value is the cost, the insurance, and the freight paid in getting the goods to Anguilla. The tax base for the excise is based on the CIF value plus the import duty and the custom service fee. The tax base for the GST is based on the CIF value, the import duty, the custom service fee, and the excise. Now, these are two levels. There are two levels of compounding applications in the present legal framework. And the compounding effect application takes effect from the excise tax application, where you see the excise tax, the CIF value, you first work the import duty out, and then the custom service fee. Those are added to the CIF value before the excise rate is applied. So that's the first level, the first tier of compounding effect. And the second tier, the second level, is where the GST is applied, where you add to the CIF all the taxes that were paid above, which is the import duty, the custom service fee, and the excise. Those are added to the CIF value before the 13% rate is applied. The 13% GST rate is applied. Now, it is proposed that the second level of the compounding application would be removed. And you'll appreciate that that second level involves more, it adds more in terms of numerical value to the goods before the application of the GST rate. So the new tax will be implemented without that compounding effect. And when you say without a compounding effect, it means the rate that is applied to the CIF value only. If there's a compounding effect, it is applied to the CIF value plus whether it be import duty or custom service fee in the case of excise, and import duty, custom service fee, and excise in the case of the GST. Now, what are the proposed legal adjustments? Firstly, a repeal of the GST Act. Yes, there will be a new GST Act, but it will not be the Goods and Services Tax Act, it would be the General Services Act. So you repeal the GST Act and you enact a General Services Tax, and this will be administered by the Inland Revenue Department and has without customs involvement. There will be the enactment of a new goods tax. And that new goods tax would be the tax that is administered by customs at the borders. So when goods are imported, the customs will collect that tax at all the ports of entries in Anguilla. Now these amendments would be incorporated. All these changes would be incorporated into the integrated customs tariff, which is the nomenclature that customs operate under in terms of the duties, all the rates and so on are included in the tariff. And then the changes are also configured into the Asecuda Wall system, because everything is operated electronically at customs. All the brokers file their documentation electronically. The system now allows brokers to even file documents when they are outside of Anguilla in another jurisdiction. So the changes, once they have been enacted into law, will be configured for us into changes made into the tariff and then configured into the Asecuda system. Now, the proposed goods tax, it's a very simple piece of legislation, easy to administer. When it comes to taxation, it's best to keep it as simple as possible. It will be imposed on all goods entering into Anguilla for home use. And there's a difference here. The term home use means goods that are actually consumed in Anguilla. When a consignment of goods enter Anguilla and is at the port, there are different regimes that could be applied to that consignment. For example, some of those goods could be re-exported. So on those that are re-exported, there's no tax on them. Some of them could be placed into a bonded warehouse until they are ready for consumption or to be used as ship stores. Some of them may go into duty-free shops. But the goods that are eventually consumed in Anguilla are the goods which would attract the goods tax. The tax, importantly, and as I said before, will be based on the CIF value of the imported goods. So there will be no compounding effect as the GST. It will be straight at 9% of the CIF value of the goods. And as I said before, all the rates and so on would be configured into the Asecuda system. The tax will be paid to the Comptroller of Customs as it is administered by the customs. Now what I'll do now is to give a few examples. As I said earlier on, there are actually 5 broad groups. We call them bands of duty rates within your tax structure, your international trade tax structure. Your highest rate is 20% import duty, that is. Then there's 15%, 10%, 5%, and goods that are free, no import duty. So those are in bands within the 97 chapters of the tariff. And then there's rather like a sub where the excise comes in. So there's like a sub band. So there's basically like 5 broad bands and then a sub band with the excise. So I'll give some examples touching on maybe each one to show the present structure and what the result would be under the proposed structure. So beers, for example, beers is one under the structure that has a 20% import duty. And if you look at the slide on the screen, the custom service fee is, I'm using a value of $100 because it's the simplest way to demonstrate these comparisons. The excise is 19%, but it is compounded, as we know. So the 20 for the import duty and the 1 for the custom service fee is added, that's 21, added to the 100, so 121, and then you find 19% of it. And you get a result there of $22.99 excise. And then the GST is further compounded. So you add the 22, the 1 and the 20 to the 100, and then you find 13% of it, and you get $15. So the total revenue collected presently on beers valued at $100 is $62.71. Under the proposed measure, you have the import duty remains the same, that is not being touched. The custom service fee remains the same. The excise remains the same because the GT is the one that is going to change. It's now 9% and it is not compounded. So 9% of $100 give you $9. And when you add up all the duties payable on the proposed structure, you get $52.99. So it's a reduction of $9.72 and a percentage reduction of 15.5% on that particular, that's at the port. I'm talking about when you import a good. If it is valued $100, that's what you pay customs presently, and on this side is what is proposed that you pay. Right? So that's the first example. And this is one that is under the 20% import duty. So that was beers. If we look at windows, window frames, and doors and those stuff, those are found under Chapter 77 in the custom tariff. And we use the same value of $100. The current import duty is 15%. This is the second band of goods. The service fee is the same $1 because it's 1%, and the GST is 13. If you notice here, there's no excise in this grouping because windows do not attract excise tax. So there are only 3 lines in terms of 3 different taxes that are applied to windows: the import duty, the custom service fee, and the GST presently. The GST is the only one that is compounded because excise is not there. So 100, the 15 and 116 added to 100, you get $116, and you find 13% of it, and you get $15.08. And the total you pay is $31.08. Under the proposed structure on this side, the import duty and the custom service fee remain the same. But the goods tax, which is GT, is a standard percentage of 9%. It is not compounded, so it's $9. The total comes up to $25. You save $6.08, which is 19.56% on what the present structure is. That's the saving at the port when you import those goods. So that's on doors and windows and frames and so on. Clothing, which is a ban now that carries the 10%. Remember, I'm looking at the different categories from 20% import duty, 15%, 10%, 5%, and then 0% import duty. And the result there is, for clothing, you have 10%, so the import duty is $10, the customs service fee is $1, and the GST is $14.43, which is 13% of $111. Gives you a total of $25.43. That's the current structure. And under the proposed structure, the only line that will change will be the GT line, which will be $9 because it is not compounded, and it is reduced from the 13 over there. So when you add the 9 and the 11, you're paying a total of $20. That's a saving of $5.43, which amounts to $21 and 21.35% of what you would have paid under the current system or structure. So that's clothing. And that was 10%. The 5% band of import duty will look at household tools, and that is found in Chapter 82 of the tariff, using the same CIF value of $100. 5%, $5 import duty, $1 customs service fee, and the 13% of $106, $13.78. And the only application under this new proposed structure will be the GT, which will be $9. So under the current structure, for tools, household tools, you pay $19.78 for a value of $100, while under the proposed structure, you'll pay $15, which is a savings of $4.78, which amounts to almost 25% reduction, 24.16% reduction. Now, propane gas, which is something that every household uses. If you notice there, 2711 is the tariff number. There's no import duty, but there is excise on propane gas. So there's no import duty, so we would have looked at all the categories, but I also will show you one without import duty and also without the excise. The customs service fee is your starting point. It's $1, 1% of 100. The excise on propane gas is 6%. So $101 times 6% is $6.06. And then you add $7.06 to the 100, and you work out the GST, which is 13%. So 13% of $107.06 is $13.92. And your total you pay for propane gas is $20.98 on a value of $100. Under the proposed structure, the GT, the goods tax, is the line that changes. The other two lines remain the same. And the GT is now $9 because it is 9% of the CIF value of $100. So the total here is $16.06. a savings of $4.94, which amounts to 23.45% reduction in the proposed structure vis-a-vis the current structure, and that's for propane gas. And then I want to look at books, because books in the tariff are free of both import duty and they do not attract excise. So all book attract is the custom service fee of 1% and the GST of 13%. And so $101 times 13% on the current structure gives you $13.13. So the total you pay will be $14.13. And under the proposed structure, what you will pay is $10. $1, which is 1% for the service, custom service fee, and $9, which is 9% of the $100 because the goods tax is not compounded. You save $4.13, which amounts to 29.23% of the from the vis-a-vis the current structure. So those examples encompass the 5 bands. They also show the excise, which we refer to as a sub-band, and it's a wide cross-section of the tariff because those are what you have. Those are the bands that you have in Anguilla. Now I want to look at vodka, liquor, hard liquor, because those are generally looked at too as high-duty goods. You talk about the brandy, the gin, the vodka, and so on. And the results are seen there in that slide. Chapter 2208, that's the chapter under which vodka comes under the tariff, and using that 100%. Now, vodka is a combination of what we call ad valorem and specific duties. Ad valorem duties are duties where a percentage is applied to the value of the good, while specific duty is based on the quantity in terms of the gallonage or the liter and so on. So for this purposes, the import duty on gin, whiskey, brandy, vodka, and the like is $4 per liter. And for the example, 2.1 liters gives us the value of $100. So what we use as a yardstick here is 2.1 liter. So the import duty is $8.40, and the custom service fee is $1. The excise is also 4%, which is $8.40. Now, because the excise here is a specific duty, it is based on the gallonage, the liquid gallonage. It is not compounded. You can't compound that. You can't use that application. So the only compounding effect here will be the GST. And so you add up the result that you get to the CIF value, and you multiply the 13%, and you get $15.31. The total revenue, $33.11. And on the proposed structure, The import duty, the custom service fee, and the excise remain the same. Because the only change will be to the goods tax, which is 9%, and it's 9% of the CIF. It is not specific, and it is not compounded. And you get a total of $26.80, a savings of, to consumers, that is, of $6.31, and a percentage reduction of 19.06%. Right, so in terms of summary of the analysis, you will appreciate that in every category that was projected, there have been reductions. There have been reductions in the coming from the new structure. If the proposed structure is implemented, there will be reductions at the port, at importation of these items. And the average reduction, a simpler average, I would say, reduction is about 21%, which is significant in any measure. No matter how you measure it, it's significant. And even cigarettes and high duty stuff as alcohol and so on have been reduced. I mean, it's on the slide that, you know, these, based on the objectives of the government as we projected earlier on the screen earlier on, these maybe gains or these reductions, I think it's expected that the consumers should benefit from them. And so the question, that's why I put the pertinent question, is how is the consumer going to benefit from these reductions in terms of maybe what mechanisms are in place to ensure that these deductions filter down to the ordinary consumers. Now, in relation to transitional arrangements, the measure is scheduled to take effect from the 1st of August. But, for example, under the principal customs legislation, which is Cap 169 of the laws of Anguilla, the Comptroller of Customs has a time period where he can collect taxes due to the state, the country. So if, for example, goods were imported under the old regime, but they were not, as we say, properly cleared, then the customs will still be authorized by law to collect outstanding duties or revenue that are due to the state. And so there is always a provision in new legislation or amended legislation that takes account of these transitional measures to say if there are outstanding duties from the previous regime, tax regime, then the Comptroller of Customs will still be able to collect those outstanding taxes. So thank you. That's the presentation in terms of how the new measures will affect imports.
Thank you so much. We now open up the floor for any questions.
Yes, pleasant good afternoon again. I'm Xavier from Voices Radio. So as it pertains to the GST tax, I'm just Are there, okay, from my understanding, does it appear as though there'll be two price drops? Because I'm thinking the 9% at the port from 13%, as well as what's on the shelf. So can we expect, is it two, or is it in terms of a price reduction where we'll see them?
Well, like I said earlier, the GST will be removed from the port and replaced with a 9%. And retail businesses, they will be deregistering. So essentially, they will have to be paying the services tax, the GST service tax, on their electricity bill, and their other service bills. So there will be, an opportunity for them to spread whatever that cost is, work that cost in to the pricing of their product, like any business will. And what the difference will be after that is that there won't be a 13% GST on your profit.
Okay, well, based on watching those slides just a while ago, I want to know, ask for clarity now. Is it a 21% loss in the overall tax, or is it per item? Just to be sure.
It would be the
loss-
overall.
Hmm?
It would be the overall
The overall
tax, yeah.
The overall tax. Okay.
But that is based on a simpler, a simpler average. That is based on a simpler average.
Okay, understood.
Yeah.
What is GST paying for? Because I listened to House of Assembly last time, and I listened to the Honorable former Premier list out all the amazing things GST is doing. So, from the government aspect, what is GST paying for?
That one above my pay grade, I'll put it over to the Minister of Finance, Premier.
Yeah. The first thing that we have to remember is that GST is a consolidation. Remember, from the days of the beginning of the implementation, we wanted to have an overall tax, a broader tax base than what we were having. So we had all of these different taxes, including the accommodation tax. We had the customs duties. We had the environmental tax. We had all of telecommunications tax. We had all of these taxes, and so we wanted to move towards a more broad-based tax. So the GST is a consolidation of a number of previous taxes that we had, but it also would have created a different tax structure in terms of requiring a 13% payment up front at the port to the government of Anguilla, and then it would have included a claim back aspect of it, which was something new in Anguilla. So the reduction that we're proposing does not impact any of the government, the services that are being provided by government. In fact, the way how we have assessed it is that when the GST was implemented, there was an expectation that the 13% would yield a certain amount, and in fact, it was overperforming, and you have remembered that the previous administration used to repeatedly say that the GST is overperforming because it was doing better than anticipated. Our position has been, well, if the GST is overperforming, then we need to give some back to the people and allow persons to have more buying power, allow businesses to be able to hold on to some of that money that was being paid up front at the port so that they can continue to invest in their businesses. So this is the intent of the structure that we are proposing, to be able to allow people to retain some of their monies in their pocket. We want to encourage local spending again, and this is important because we know for a fact that people had started to travel over to St. Martin to buy basic food items. We know that, and they would bring them in by way of suitcases, boxes, etc., things that you would expect that we purchase locally. And so with this reduction, we're not just anticipating that the businesses will be able to have some relief, will be able to reinvest in their businesses, will be able to lower their prices, but also we want to encourage local spending. We want to encourage our people to spend in Anguilla, and so in order for people to spend in Anguilla, we want to ensure that the prices are attractive once again, because there was a time and especially during the days of COVID, if you would remember, there was no shopping in St. Martin, there was no shopping outside, and people felt relatively comfortable shopping locally. We want to get back to the point where our people can shop locally, they can visit the restaurants the way they used to, they have the kind of spending power to take care of their family, their children, etc., and to reinvigorate the economic activity in our island.
Okay, so now for further understanding, we understand that the GST has been overperforming, yes. Like for instance, in 2022, it brought in 159 million versus it was expected to bring in 90 million. So now my question is, with this reduction, how does that sort of say fix that overperformance issue? I guess what I'm trying to understand is that if you made so much of a surplus like that, then I'm guessing now with the reduction, you're going to have a loss of revenue, but like, how does that balance it all out?
Sure. If you look at the calculations from back then, the difference between what was anticipated to come in, what came in, and the percentage of that it would have brought in over what was anticipated. And if you apply an anticipated 21% revenue loss at the port, then you would still come in, if you do the calculations, you still come in at about 50-something%, meaning that it would have yielded still 50-something% more than what was anticipated. The difference is the expenditure that any government would have from one year to the next. So, for instance, in the 2025 budget, based on what the expenditure was at that time, both on capital projects as well as recurrent expenditure, meaning like salaries, things that are incurred every month by the government, in addition to the capital projects that the previous administration had intended to embark upon. That would have put us about $50 million beyond what was anticipated to come in for the year. So it really comes down to the government's policy of the day, what you intend to spend. What we've done since we've taken office is redirected our attention to focus on what we think are the needs of the people first. So we're focusing on improving the cost of living. We're focusing on allowing people to have more buying power, more spending power, and we're focusing on certain needs that we think are important, such as fixing the water infrastructure, etc. So those are things that we've placed in priority based on what was there in the 2025 budget that previous administration would have passed.
Okay. And this is for anybody, from the information you have available to you, is it possible for you to show us how the economy contracted, or whether it contracted or expanded with the tax in place, with the outgoing tax structure versus what you expect from this new tax structure?
Well, in terms of the contraction of the economy, you can go back to the previous budgets, and I will, for instance, guide you to the 2023 budget, where either 2022 or 2023 budget, where it would have anticipated that there would have been a super inflation, and this would have been in the former Premier's budget address. So if you go to the budget, you look at the front, I think maybe the first 4 or 5 pages of it, it will explain that there was supposed to be a super inflation on the implementation of the GST, and then in the following budget, the year after, it will have stated that as a result of external and internal factors, the cost of living has increased. And one of those internal factors was the implementation of the GST structure. So let me be quick to say that the previous AUF administration had been in support of a GST tax structure. We had just not expected or anticipated the structure that the previous administration did put in place. And so this is our attempt to sort of correct what we think was a structure that was too onerous on the people of Anguilla at that time.
That's a good point that you made at the end, because someone literally online asked if we're going back to before GST was implemented, and it kind of reminded me that I think under the Anguilla United Front administration, you guys were the one to implement the 9% IGT. So others are asking, well, are we going back to essentially before GST days, sort of?
So for the goods, and that's I think the crux of the presentations that were made today, that the goods are removed from the GST tax structure, so the reporting requirement is no more, etc. But there is an increase in terms of the 9%. It's different from the IGT because the IGT was compounding at the time. This 9% is not compounding.
Okay.
So although it's 9%, it's not the same kind of calculation of 9%. And there's also the services aspect of the tax, which remains. So, law firms, accountants, etc. Any entity that provides services over the amount of 300,000 will have to register for the structure.
Okay, thank you.
Yes, I see a question here online asking, how will you ensure that there's no under-invoicing and what policing mechanisms are implemented to counteract this potential issue?
Yeah, I know. If I could take a question from you, based on what would have taken place over the past 3 years, there's a school of thought that invoices would have 100% be correct, right? Because now you have to claim back on what you pay, and then you have to apply the GST on your profit. So, Customs Department at this present moment should have a grasp on what type of invoicing they would have seen over the last 3 years, because it's the same businesses importing the same products from the same suppliers. So it requires an exercise for customs to investigate if they realize that something looks nefarious. So if all of a sudden invoices are drastically low, customs will then have to trigger the process of investigating, but why 6 months ago this product and the invoice was $100, but today it's for 25. I mean, I think that is a matter that the controller of customs and those who are in the field, they would be smart and they will be equipped with the tools necessary to investigate a situation of such. I don't know if the customs consultant here have experienced anything like under-invoicing in the region, but he's an expert in customs and tariffs and what's not. If you want to answer or add,
Well,
I'll stay away.
Thank you. Only to say that it's a challenge throughout the region, especially where taxes are very high. But when you have instances where taxes are being reduced, that in itself should encourage persons, to not to under-invoice.
Yeah, well, I think the issue, when you mentioned that customs would be able to tell if you go from 100 to 25 is, in a sense, before, where you would assume there was correct invoicing, is because businesses would have wanted to claim back the correct amount. But now with the GT, the goods taxes are direct tax on the businesses and not really on the regular consumer.
Right. Yeah. So what the minister said is also important. Custom now has a pool of data that they can mine, which is 3 years data. Small society, same businesses, same supplier, similar type of products coming in. So if you do proper analysis, you can see if there are any trends and you can follow up on them.
Yes,
and Customs has enforcement units, once those units are properly, staffed and, with trained officers and so on, and have the competence, then they can follow leads and try to curb whatever instances of that sort
Yes,
is taking place.
Just for the ministers, what are the penalties for if someone were to under-invoice a product, imported product?
What the penalties are right now, but I'm sure the customs legislation would already be equipped with those types of fines and penalties for under-invoicing, because it's not a new thing.
There are those online asking, what other tax base will the government implement to cushion the 21% loss in revenue? Or is the plan to just take the loss as is?
No, I think we have accepted the fact that there will be a revenue decline on one end, and we expect the economy to be stimulated. More money in the hands of ordinary people would mean that more money will be spent. So it's something that we have decided to monitor. Over the next few months, it'll be an exercise for us to continue to keep our fingers on the pulse as it relates to what's happening in the economy.
Okay, so the previous administration had a way of putting out the expected, the financial statistics for the tax. Is it the intention of this administration to continue with that? Because, it was quite helpful. It gave us an idea as to, from each sector, how much the tax was pulling from. Additionally, they used to put out at least every year how much they've paid down on the national debt, which is a question of mine I do have, at least for us to understand as to where we are, essentially.
Yeah, so in terms of putting out the data, I recall that there were two that they were sent out twice in terms of the graph that would have come out of your ministry. Yeah, twice it would have taken place in terms of what it looked like for the percentages coming from each sector. And I'm sure that there should be no difficulty in being able to do so, to continue to do so. In relation to the debt, I think it's important to say that the debt is being paid back in accordance with the repayment plan. And so what we can do as well is to continue to record that, because it's being paid down as was from before. So even prior to the previous administration, there was a debt repayment plan in terms of how the debt was going to be paid down. And that continued during the previous administration, and it continues now. So I can tell you that based on my recollection, we can get the data that it's being paid down, and we anticipate to be out of that debt by the end of 2026. You remember that?
That quickly?
No? No? Well, we can get the data. Yeah, because I can't recall offhand. I don't want to misspeak.
Right.
But it's being paid down in accordance with plan.
So we're almost out of it then.
I can't tell you.
Okay.
Yeah, because I thought it was 20. Maybe I'm thinking something else. But yeah, but we are we ahead? We are ahead. Yeah.
So there's a specific amount that the government, based on the restructuring, the repayment plan, there's a set amount that government pays each month, or just.
No, there's a payment plan. I can't recall whether it's monthly, whether it's quarterly, whatever it is, but it's set. It has been set for a number of years. We're paying down according to it, and what we'll do is we will ask that information be released the same way it used to be in the past. So you can continue to see the pay down, or maybe what we might even do is start it from January of this year to now.
Right. There was one other question I had. From conversations with one of the ministers from the previous administration, it was made from my understanding that for quite some time, Anguilla's budgets had to be approved by the UK government. I think from prior conversations, it was explained to me that once either the debt or a particular factor had reached a certain amount, that approval is no longer required. So my question is UK approval still needed for our budgets?
Generally, there's oversight in terms of the budget, etc., but in terms of our relief plan, there are certain principles that the UK want to ensure is being done, meaning that we're paying down the debt, that we have sufficient reserves, that we are doing all of the things that we have to do with our benchmarks. The other thing is, when I said 2026, I was speaking about the UK benchmarks. And I think we'll be in compliance with the third benchmark by the end of 2026. So that's what I was talking about, not the repayment plan on the debt.
Okay.
Yeah. If there are no other questions, I want to thank you, those of you who are here in person and those of you who have joined us via radio and social media. And I want to thank as well Mr. John, Mr. Hobson for joining us at this press conference today. So thank you to one and all. Have a wonderful day and a very productive week. Thank you.